If we're right, that 19 trillion is going to scale to 220 trillion during the next really 7 years. So that's a 42% compound annual rate of return. And whereas the rest of the world we see appreciating little or nothing at all. Why would that be?
Cathie Wood of ARK Invest discusses the significant impact of disruptive innovation on the global equity market and predicts substantial growth in this sector. Disruptive innovation involves making high-priced or complex products and services more affordable and accessible to a broader audience. Essentially, this process disrupts existing markets by pushing out long-established competitors. Wood highlights that currently, roughly $19 trillion of the $117 trillion global equity market cap is associated with disruptive innovation, representing a little more than 15%. So, what does this have to do with Bitcoin? Well, Bitcoin and other cryptocurrencies are widely regarded as disruptive innovations because they have fundamentally changed how we view and use money and financial systems. Their decentralized nature challenges traditional centralized models, while its introduction of digital currency enables secure peer-to-peer transactions without intermediaries. Truly a revolutionizing innovation that Wood also acknowledges. In fact, Wood and her team of analysts anticipate that the $19 trillion associated with disruptive innovation will scale to $220 trillion over the next 7 to 8 years, representing a remarkable 42% compound annual growth rate. This growth is attributed to the concept of creative destruction, indicating that the traditional world order will undergo radical change. One example of this radical change is AI. It's everywhere, and no matter how controversial it may be, AI is certainly asserting its global dominance. Wood points out the big jump in their predictions for how valuable artificial intelligence will be, going from $40 billion to $400 billion. Let's look at clips from Cathie Wood's discussion with Brett Winton, as Wood shares her forecast regarding the financial impact of disruptive innovation. As we share these clips, we'd appreciate your support by liking, commenting, and subscribing to our channel. Your support helps us keep providing valuable updates. We hope you enjoy the video.
If you look at the market today, roughly 19 trillion of the 117 trillion in global equity market cap is associated with disruptive innovation. So let's say a little more than 15%. If we're right, that 19 trillion is going to scale to 220 trillion during the next really 7 years. So that's a 42% compound annual rate of return. And whereas the rest of the world we see appreciating little or nothing at all. Why would that be? It's back to that creative destruction. The traditional world order is going to change radically. And the traditional benchmarks, the broad-based benchmarks, whether it's the S&P 500, MSCI World, and the NASDAQ, for example, they're not going to be able to keep up with this. And one of the reasons, we learned an important lesson from Tesla. Most people who waited until the S&P gave them permission to move into Tesla are underwater right now, because there, as is always the case with disruptive innovation, there's controversy, and it has taken the stock down. So anyway, so we're pretty excited, and as you can see, we delineate those growth rates by major innovation platform, with robotics being the fastest growing. It's also at a very, very low base. Industrial robots in particular, very low base. Whereas AI, 37%, that is off of a substantially larger base. And just to give you a sense of the drama here, even for us, and all we do is focus on disruptive innovation. I believe this was 2020, our expectation for the market cap of artificial intelligence out there in 5 years from now was I think $40 billion. Now it's up to $400 billion.
In the same discussion, Wood also explains the impact of Bitcoin ETFs on Bitcoin's price. Before the launch of the ETF, many investors engaged in anticipatory buying, expecting the ETF's introduction to drive up the price of Bitcoin. However, once the ETF was officially launched, some investors decided to sell their holdings, leading to a sell-off in the market. However, Wood notes that a significant portion of Bitcoin is held by long-term investors, which provides stability to the market. Additionally, Wood analyzes movements in credit default swaps, signaling potential shifts in market sentiment and economic outlook. Credit default swaps, also known as CDS, are financial tools that offer protection against a borrower or issuer of debt failing to repay what they owe, like bonds or loans. There are similar financial instruments in the cryptocurrency market, and these are often referred to as crypto credit default swaps, or simply crypto CDS. Even though Wood recognizes the general expectation for a smooth economic transition, she maintains a sense of caution, foreseeing potential future difficulties such as pricing pressures and job cuts. In this environment, she promotes investment strategies centered around innovation, highlighting their ability to withstand market declines and maintain growth during times of economic instability. We will now bring you more clips as Cathie Wood shares more of her insights about Bitcoin and credit default swaps.
I'm going to show the Bitcoin to gold ratio. Many people call Bitcoin digital gold. We would put it in that category, a store of value, a risk-off asset. And last year, during the regional bank crisis in March, Bitcoin shot up 40% as the KRE, the regional bank index, was imploding. And here again, the regional bank index is acting up. And after a little bit of a correction, after 11 ETFs were introduced, we are seeing Bitcoin catch a bid again. So this idea that it's a flight to quality or a flight to safety is reasserting itself here. The reason we believe Bitcoin went down after the ETFs were introduced is because there was a lot of anticipatory buying before Bitcoin or the ETFs came out. There was a bit of the sell on the news. These are the trading types who just are very opportunistic in that way. As you know, or if you've been listening to In the Know, 15 million of the 19.5 million Bitcoin outstanding are in what we call strong hands. They haven't moved their Bitcoin in more than 155 days. And this chart just shows you that even relative to gold, Bitcoin has been rising. There's now a substitution into Bitcoin. And we think that is going to continue now that there is a much easier way, less friction-filled way to access Bitcoin. And you can check out in our big ideas what we think the impact of institutional participation in this market is going to be on Bitcoin's price. And then just to throw another wrinkle into the discussion, we are struck that credit default swaps, both for investment grade and high yield, are coming down in this environment where for many companies, they're beginning to see revenues go down. That's very interesting to us. But you can see how sharply this can move. In late 2018, there was a serious correction in the stock market. I think it was the fourth quarter. And actually, back then, NVIDIA led the decline. It was cut, as I mentioned earlier, by 2/3, and there was just this reverberation through all kinds of markets. What's going on here? And credit default swaps shot up pretty sharply. And you can see what happened during COVID. And then again, you can see what happened in 21 and 22, as the Fed was talking about in 21 and then actually raising interest rates in 22. Lots of fear out there. Now there seems to be complacency building in, and it has to do with this soft landing that seems to have become the consensus forecast. We do think that's going to be shaken up as companies lose pricing power and start laying more people off. And so we think this will reverse, and the flights to quality will get another bid out there.
Meanwhile, Bitcoin's price has shown resilience amid market fluctuations, hovering between $42,788 to $43,710 as of making this video, with a slight increase of 0.62% over the past 24 hours. This stability and positive growth indicate the continued relevance and strength of Bitcoin within the broader cryptocurrency market. Thank you for tuning in to our discussion on Cathie Wood's insights. How do you think disruptive innovation, like Bitcoin and AI, will continue to shape the future of finance and investment? Share your thoughts in the comments below. Don't forget to like, comment, and subscribe to our channel for more insightful updates. Your support keeps us going, and we appreciate every interaction. Stay tuned for more insightful updates on the world of crypto and finance. Remember, in a world of constant change, staying informed is key. Thanks again for watching, and until next time, take care.